What's up, everyone, and welcome to the real estate breakdown for January the 27th, 2021. In today's breakdown, we talk about another extension for the federal eviction ban. Single-family rental demand is compelling many investors like homebuilder Lennar to become a single-family landlord. And Zillow is upsetting many by one particular thing. What's up, everybody? And I am Jonathan Smith, and this is the breakdown for January 27th, 2021. We begin with one of the most important economic stories for the year, in my opinion. Janet Yellen is now the new U.S. Treasury Secretary. She'll be the first woman to lead the department in its more than 230-year history. That's remarkable. Many investors like Anthony Pompliano have argued that her installation is going to make many investors in the real estate and equity markets, including crypto markets, very, very wealthy this year. And I believe this will be one of the most important narratives of 2021 and its implications for those of us like you and I that are aiming to multiply our wealth wisely. This is one of the most significant things to watch, and we're going to watch it very carefully here on this channel. The most recent jobless claims report was just released, and the numbers revealed that claims are down slightly compared to the previous week, but they're still running high in about 900,000 for new claims. That's actually lower than Market Watch economists predicted when you combine state claims with applications. Now, continuing claims have come down a bit, though the Bureau of Labor Statistics reports that 15.9 million people are getting unemployment benefits from a total of 8 state and federal programs. That's 2.4 million people less than a week before. That's a big dip. Now, on to the latest new build narratives emerging this year. There is a vast amount of evidence of a building boom, literal boom for single-family homes. The Census Bureau reports that new home construction in December hit its highest level of activity in more than a decade. It rose 5.8% for all kinds of homes and a whopping 12% for single-family starts. The momentum is expected to continue as evidenced in permits for future residential construction were up 4.5%. But if you break out the numbers, folks, for single-family permits, they were up a whopping 8%. The increasing tailwinds now for existing home sales, they're continuing to gain speed as we move into 2021. The numbers were higher than expected in December, although the numbers correspond when ever tightening inventory as prices continue to rise. That's normal. Now, the National Association of Realtors says that the prices were up 7%, 0.7%, not 7%, 0.7%, which brings a year total to 5.64 million homes sold. Just by the way of perspective, that's up 5.6% from the 2019 total and the highest level of activity since 2006. The National Association of Realtor Chief Economist Lawrence Yellen says, what's even better is that this momentum is likely to carry into the new year with more buyers expected to enter the market. One of the things that's going to drive this, and it's going to be an interesting narrative to see as this year progresses, is the $15,000 tax credit that Biden wants to pass. That's going to add additional pressure here in the 2021 market, especially with new buyers. It's going to be interesting to watch. Again, we're going to track that very carefully here on this channel. Mortgage rates, well, they wavered a little bit. They dipped 2 basis points last week. Freddie Mac says the average 30-year fixed rate mortgage is now 2.7%, and the 15-year is 2.2%. Not too bad, but it did dip a little. Now, one of the most important real estate stories of 2020 was the federal ban on evictions. The ban has been extended now through March. This is one of the first executive orders signed by the new president, and it's left many wondering if there will be more relief for landlords as well. Previously approved legislation offered $25 billion in rental assistance, if you remember, and President Biden's proposal would provide another $25 billion. But the back rent owed to landlords across the country is much higher than that. Estimates at this point range from $70 billion to $100 billion in back rent. distribution of this amount that will begin soon for that initial $25 billion. Tenants, if you are one, you can apply for the funding to pay their rent back, and landlords can also apply on behalf of tenants. What I understand is the Treasury Department website says that in general, funds will be paid directly to landlords and to utility service providers. Now, Biden's executive order also extends a moratorium on foreclosures of federally backed mortgages and allows mortgage forbearance programs to continue. If you still have not taken advantage of the mortgage forbearance, please, you can see this video and another video right here that I outline step by step why it's important, how you could find out if you can qualify, and what it may mean for you. So I would highly encourage you to consider it. Obviously, test everything and hold fast to what's good, like I always say on this channel. But this has been continued. The new deadline for both is the end of March. So eviction and foreclosure moratoriums, they could also be extended again, depending on the status of the pandemic. Word on the street is Biden wants to later on propose that those be pushed even to the end of September. Now, one of the most, I think, important narratives emerging for real estate investors is the demand for single-family home rentals is growing so rapidly that you've got large builders like Lennar getting into the rental business. The Miami developer has created an entirely new unit called Lennar Single Family Rental. They hope to raise $2 billion from investors to move forward on that plan. And the National Association of Homebuilders says as of Q3 in 2020, builders were constructing 14,000 new rental homes. That's up from 11,000 in the third quarter of 2019. And the money that Lennar expects to raise would add thousands more rental homes to those numbers, which is significant. Lastly, an interesting move on Zillow that recently, well, it's just frustrated a lot of people. And if you're a landlord, it will impact you and your marketing efforts. What is that exactly? Well, Zillow has announced that listing rentals will no longer be free. The policy changed in November, but it ended this past week. Brokers must now have contracts with Zillow in order to publish to Zillow's feed. They can also list a rental directly on Zillow for just $9.99 a week. The ad would appear on Zillow as well as Trulia and HotPads. Zillow told Inman News that the new procedure will provide better results, quote. The company said in a statement, "We've seen that Zillow Feed Connect listings usually spend fewer days on the market than free listings because of increased lead volume and higher quality leads." But it's leaving many people upset, including some realtors. They're not happy with the move. Dallas-based realtor John Ingalls says, "I'm having a significant philosophical issue giving money to a company that spent years trying to run me out of a job." Folks, that's it for the breakdown today. I hope you have a great Wednesday. Hope you have a great rest of the week. And I will see you in our next video regarding the mortgage market tomorrow. As always, if you benefited from this video or you think anyone might benefit from this video, just do your boy a favor here. Give me a like or send it to someone. Consider subscribing and drop me a comment below. Let me know what you think. Let me know also, if you want to, what kind of content would be helpful for you to hear and me to post. I want this to be as helpful as possible, all again with the aim of helping you multiply and protect your wealth through real estate and other investments here. That's it for today. See you in the next video. Take care. Bye-bye.